All right, we're recording now. So going back to what you were just saying there about, you know, kind of resetting on, and looking at each particular part of a specific model, right? It doesn't have to be mine. It can be any that you see. There's a lot of people on Twitter who have their own models at this point, and that's the beauty of all of these ideas and concepts. You can really formulate your own. And when I do like the private mentorship stuff, like that's the end goal. So it's like, if somebody doesn't know a lot of these concepts, over the first few we'll talk about it, and then beyond that, like towards the end, it's like, okay, now it's time to like put this together. It's great that you know all of this, but if you don't have a way to apply the stuff that you're learning here, then it's kind of useless. So but that's key. That's a key component that I think is missing quite a bit. But to expand off of that, one thing about the model that I've shared with all of you guys in particular is there's a chance that that doesn't happen throughout the entirety of a day, right? And if you go through and you look at all these charts, I'm sure you're going to find examples of it. What could be technically quote unquote every day, right? Depending on the time frame, of course. But with the model that I use, you know, I felt it in myself that it was just important for me to nail down one setup, right? So that would be the model that I use, right? That's my setup. But that's going to test your patience a lot, right? And what do I mean by that? That move can take a while to get down into discount of a range, right? Um, it is what it is, right? I mean, even if we were to look at it, from the price action that we saw today, and even if we were looking at it from the daily range, that morning run up, right? From that high at 9:30, it took us until about 11:15 for us to drift down into discount of that range. That's 2 hours. Like, can you personally uh, sit there and wait 2 hours, or are you gonna itch to trade something else, right? I mean, or just try to force something. So patience is definitely an important addition that obviously I think personally with time everyone will get better at that. I mean, at first you kind of just want to press buttons at any chance you can get, but let me see. I think someone's snoozing right now. Let me just mute them. No, I think we're okay. Oh wait, no, I see it. Okay. All right, so I think we're good now. Sorry. So again, that's why now the way that I've paired up everything, it's just a way for me to um, at any time I could be able to look and see that there is some sort of trade setup that is imminent. And what I mean by that is, it might not be that exact moment that I decide to look at the computer, but if I have whatever my range might be, if I already have gotten close to discount, I know I can wait for discount. If we've set some sort of range and we see some sort of imbalance to the downside, then I feel, okay, I can look to trade that specific fair value gap to look for that move to discount. Might not be the biggest move in the world, but that is like the second component to the model. Like if I was to be itching to trade something, right? Third, now what I've shown with the kill zone idea, that is just another added layer that, do you need to use that with my model? No, you can use that all by itself. You don't really necessarily need my model, because you're going to see how um, you know it did not take my model for the kill zone to be successful today. um, or there's so many other different things that you can be looking for. You can be strictly looking for breakers, right? That's it, right? That could be your model, right? Or you could say to yourself, I want to be the guy who's going to trade higher time frame liquidity sweeps, specifically on the hourly chart. So until you see price, get into or I'm sorry, sweep liquidity on a hourly time frame, right? You could say to yourself, I'm not trading until we sweep that low, right? Or high, doesn't matter. But there's so many different ways to go about it. And, ultimately, while I think these concepts are far superior to anything else that other people are using. And, again, that's something that I'd feel confident about. You know, I don't want to say, I'm not like trying to check people, but, if you were to just go through multiple different strategies, and, again, this takes time and patience, and I know a lot of people don't have it, but go through, 10 examples of each where a specific setup happened at a specific time, and, what is the efficacy of the moving average versus what is it for, just simply reading price. I really don't think it's close at all. And even better, on top of that, I think you just have an enhanced ability to explain what's happening and why price would do what it did, right? Simply put, uh, you know, one of the Twitter geniuses, they tweeted something before. It's like, oh, why did this happen? Was it the news? Was it this? Was it that? Like, at the end of the day, we can all speculate, right? But like, who really cares, right? Does it really matter? I feel like, it's almost like a devised game plan from people with a ton of money to get people to think about reasons why versus like actually like trading it, if that makes sense. I think people are just caught up on the wrong things, right? If it goes in your direction, like that should really be the only thing that you care about. Versus, oh, Ukraine news, or oh, um, I don't know, something with Powell. I mean, come on, at some point, like I think everyone will, like, it'll finally, even if you're trying to resist, like you're trying to tell me that data this morning was good and then they changed their mind about it a couple hours later. I don't buy that. I think that's ridiculous. Um, but or you could say it's something else. Oh, it was the Ukraine news, or something like that. But like, we always talk about, like, I personally don't, but you hear it all the time. Oh, the market's pricing this in. Like, don't you think a lot of like the conflict at this point would have been priced in? This has been going on for like 2 years now. That's just the way I look at it, and I think it's just it's really not helpful in the small window of time that we're trading in my opinion. Of course, how can you explain price melting down the way that it did? I wish I could. I can't, right? I can use some examples in price to show you guys where, we can justify it, of course, but in the moment, I hate to say it, but a lot of the people who were cranking out these massive gains on short dated contracts, why are they buying short dated contracts that far out of the money? It's like, they didn't know anything. They kind of ran into some luck, in my opinion. They could think price is going down, but to go down as much as it did, I think that's really, really difficult to forecast. So I would not beat myself up over it if you did not catch this at all. I mean, maybe this part of it, but we'll get into that. I mean, it is what it is. But to forecast a move that ultimately went over 500 points in a short period of time, and again, even if you're to look at it from my perspective, like, again, can we justify it? For sure. Was there really an opportunity for someone who is trading using these concepts, and is really practicing being disciplined and limiting risk and the potential of getting your face ripped off? Like, was there really an opportunity for you? And if you look down throughout this entire move, you're going to notice that there really was not, maybe one opportunity, this fair value gap here on the 5 minute, this candle right here. Other than that, we never retraced back into any fair value gap. It really never gave an entry. And at that point, are you going to come out of that discipline level that you've been working for so long to be really refined with how you're entering trades, what you're using as your parameters, where you're placing your stop loss? Are you going to come out of that to try and catch a move like this that doesn't happen all the time? I don't think it's worth it, really. I think staying on a consistent path, and working on that, like, repeatable robot, if you will, where you're staying in the same type of mindset and keeping your risk well defined prior to the trade, sticking to very strategic entries, not just buying into something because you think it's going down, right? Again, on a day like this, are you going to kick yourself because you missed it? Of course, right? Everybody's kicking themselves if they didn't have a short at this point. But on the flip side of that, right, how many times have you been in a trade, or have gotten into a trade because you think we're going to dump, and then immediately reverse on you, and take you out of your contract like relatively quickly, right? So you have to weigh it from both sides. And this wasn't like an absolute sure thing, right? We talked about the idea of SMT. And SMT, I know we've talked about it a bunch in here, but just to confirm, and I'll tell you just right off the top of the bat, when I tell you guys about like something like SMT, you're probably saying to yourself, like, is Mando really looking at ES, whatever Dow, IWM, which is RTY? Is he looking at all of those all day, every day? Like, that seems like so much. Like, I'm at work, I'm working I'm trading off my phone. I don't have all the screens to be looking at all of this stuff. And I'll tell you that personally, I don't look at all of those per se. There's one giveaway, and this one giveaway is what leads me to, I don't know, maybe it's because of the amount of time that I've been doing this now, but I really don't even think about SMT until I see one staple. That's it. And the staple for today was once we were getting up towards that high, right? The second time on NASDAQ, right? And if you go back into the trading chat today, you're going to see me say it, possible SMT, right? I was not sitting here on the computer with SPY on one side and NASDAQ on the other. I really don't do that all that much, right? The only reason why I even considered having that idea in the back pocket was how difficult of a time that NASDAQ was having taking out this high, right? And once I saw that we had this wicked, it doesn't look all that big, but it was pretty sharp. That's 17 points. That's a decent chunk, right? And I was long on this trade, so I was like, ooh, dang, all right. But this grind up higher as well, price just started to get stuck in the mud and run into, clearly turned out to be a brick wall. But before taking out this high, and I'm thinking to myself, I'm like, oh shit, okay. Now my next thought here is, did ES take out that high? So, if we were to, let me just crunch this and I'll pull up a second chart. But if we were to look over here and see, you're going to notice that on that second move, here it is, right? So here's NASDAQ. Hold on, let me take this magnet off or it's going to drive me nuts. But you're going to notice, look, this is divergence between the indices, right? Okay, we did not sweep liquidity here. Okay, so we left these relative equal highs. There's like 15 sets of relative equal highs on NASDAQ above right now, right? But also, if we're to look over here at ES, look at that. ES, you did take the high, so you swept liquidity on ES while you didn't do that on NASDAQ, right? So that level of divergence right there, the fact that we're struggling to get up there, that automatically had me thinking, okay, let me check ES. If ES took the high, then there's a very good possibility that NASDAQ does not take the high, especially when it takes forever and it's a grind to get up through that high, right? Ryan even made a comment about it when we brought up SMT. He was like, oh, this is painful up to this high, right? This is a grind. And luckily, throughout the duration of this trade that I had, I moved my stop loss below the candle that created that imbalance, and I was able to kind of stick in for a little bit, but ultimately, to no avail. We didn't get that high. But all in all, there, was I looking at NASDAQ I'm sorry, not NASDAQ. Was I looking at the S&P the entire time throughout that trade? No, I wasn't. It was not even a thought until I noticed that we were running into some trouble right up around that high. Because if we think about it, throw ES out the window without this whole idea of divergence between the indices, right? And the reason why we would value that is because there's a lot of names in NASDAQ with heavy weighting that also have a heavy weighting over here in the S&P, right? But even so, on the flip side of that, you look over here and you'll notice, like, what is holding us back here, right? We're on a 5-minute chart. There is no imbalance here, right? In this situation, you had an old new week open gap, but if we're looking back to our left, we'll notice, like, there's no imbalance here, right? We know that, typically when we get this close to a high, it should be no problem. We should slice right through that, especially when we had some relative equal highs above, right? And that, again, that is the only reason why I even considered taking a peek at ES. Otherwise, I really don't. Maybe when we're in a situation like we were towards the end of the day where we were pretty much melting down, right? At that point, I'm thinking to myself, okay, I wonder if NASDAQ took out liquidity and ES didn't, but in this situation, we took it out on both right here. And this is what's going on right now. But that would be really the only time that I'm looking at the indices for that type of intel, or, again, just another added layer of confluence there. But so that's just kind of what I wanted to say about this dump. Seriously, you're gonna go crazy if you're beating yourself up over missing something like this. How often does this happen? If we were trying to play probabilities, like, good, maybe this case study or something. Every day, imagine buying a put, whatever, however far out of the money, every single day buying it. Maybe it's worth, $30, right? How many times does that go to zero before you hit something like this? Does it make sense over the long term? Like that's just the way I think about it. It is really, I don't think that these types of days where you see, now you're seeing them on Twitter where people are posting, oh, I hit this, $50,000 or 50,000% gain, on one, you know, 2 cent contract or something like that. It's like, well, that's good and great for them, but at the same time, if you're working towards a consistent level of this, where it is very structured, where it is very, ultimately building towards a specific level of consistency, I don't think you can go into it. I don't think you can go into it trying to hit these knockout bangers. So, hold on, sorry, I'm just muting it again. So that would just be my thought there. So the next thing, I'm kind of going out of order here, but I just wanted to refer back to the kill zone idea, because I know it's something that we've been tracking now, and just to show again the how effective it can be, right? So if we were to look again, we have our 1 o'clock to 5 o'clock on NASDAQ mapped out, right? You'll notice again you have your low here, your high here. You'll notice that we took out this high and made a continuation type move, right? As we were up in this area right around 9:30, if you go back in the trading chat, I did make a comment about that 18,410. Reason for that was that would have got us into discount of a overarching range, right? So this was the range prior to that market structure shift where we had here, boom, no discount retracement. Here it is again, no discount retracement. So ultimately, waiting for a high to set, that would have put us down in discount as we took out that London kill zone low. I also had an idea that we could get down there. Again, I'm not trying to say I called this, because this is extremely out of the ordinary, right? I was just thinking of this, and again, discount of our overarching range. That was idea one. Idea two was to get down here to sweep that London kill zone low, right, to complete our little setup here. But if we just go back and kind of play it out, right? So first things first, what are we even looking for when we look for this setup to kind of play out, right? And simply put, right, we're looking for a fair value gap to form in the opposite direction of our first sweep. So for example, we made this move higher and ultimately we ran higher, and this is a big run, right? What is that, about 100 points from that initial move, right? We do retrace into discount of our daily range, right? And this is really another reason why I took that trade in itself. We had discount bullish fair value gap right here, and new week open gap right off the midpoint of the new week open gap, actually, for that run higher. Ultimately not sweeping highs. Why? ES did it. ES completed my model. NASDAQ did not, right? There was the divergence right there. And that does not happen all the time. But anyways, you'll notice on this move down, like, we really created one imbalance right here, right? And this is on a 5-minute time frame. If you're looking at it from a higher time frame, you're not going to see this, but you'll notice that, you know, price ultimately does respect. And from this point in itself, 523 down to here, that's 40 points. That's pretty good, right? If you were just to play that first imbalance that formed, right? But even still, if we're looking for that low to play out, right, our low of our London session, you know, we look at it from this perspective at a higher time frame as well. If we were to go over here to the, you know, 15-minute, like there's your first imbalance on a higher time frame to the downside, and ultimately, not only did it take out that kill zone low, but again, PA, that's very difficult to forecast, what we just saw there, right? So now, which makes things even more difficult, like where do we see, you know, where can we forecast price to move tomorrow or moving forward? And first things first, we have a enormous range, right? I think that's fair to say. So our range would be from that high down to that low right now. So right off the bat, we have 50% of our current range. Do we necessarily know that this is the low? No, not yet. When do I feel comfortable with, you know, the low being set? When an imbalance forms, right? So preferably a fair value gap. I know we have a volume imbalance here from that overnight, but preferably a fair value gap to form to ultimately get us somewhere in discount for a retracement at the very least. So how would that line up with, you know, a weekly time frame, right? Well, if we look at by the looks of it right here, and this is sketchy, right? We haven't seen a candle like this since this week back here in January. So, you know, could this be the turn of the tide here? You know, it is totally possible, right? You know, I'm not really in the business to call the tops and bottoms because, you know, to be honest with you, and simply put, the way I look at it up here, right? And I think I forget who made this point, but about, you know, trying to fade a bullish trend in price discovery, meaning we've taken out an all-time high and we're kind of searching for when is enough, when does money come off the table, right? Because at this point we're not looking at a specific upside draw on liquidity for us to say, okay, we took liquidity, now it's time to retrace, right? We are above everything, there's nothing up here, right? So at a certain point, what has to happen in order for price to kind of stop dead in its tracks and start to retrace? There's got to be money getting pulled off the table, right, in order to create these pools of liquidity for later on. So at some point or another, is it going to happen? Are we going to retrace down into this town? For sure, right? But I would prefer to miss that initial move, to be honest with you, because if I'm trying to jump that short over and over and over and over and over and over again, you're getting stopped out every step of the way, right? So for me, this is something that you can back test historically, but price tends to start to retrace after a weekly imbalance forms, right? You can look at this from a number of different perspectives, right? But all I'm waiting for right now to feel confident in a prolonged period of shorts is for that imbalance to form, right? I know it's on a weekly time frame, and if we just absolutely puke off the face of the map, so be it. That's fine. But something that you also notice is that when we do form those imbalances, a lot of the time you're going to get another opportunity. So here's a weekly opportunity. Here's another. Here's another. Whoops. Here. Whoops. There it is again, right? Here's another one, right? Rejection. So there's going to be opportunity, and that's why I'm not really trying to call a top, because if this is a move like we saw here, after taking out that pre-COVID high, we grinded up for a long time, right? And you know, honestly, if we're just to kind of look at the current candle, you know, we can probably match it with a lot of these candles that had occurred on that run up from 2020, right? Some pretty ugly, pretty wide in range candles, right? So for example, this candle in itself right here from 244 up to 365, right? That is, 1,000 points in a week, right? So again, I'm just in the camp where I would prefer to wait for that little extra layer of confirmation before I start to look for shorts on a prolonged period of time, right? Now onto the daily. So here's where things get a little bit more sketchy for the bulls. And, I'm not trying to be doom and gloom whatsoever. That's not my intention, because I'm really not going to be looking for a prolonged period of short until, again, that weekly imbalance forms. I'm just trying to be realistic about what could, kind of shake out from this point, from my own point of view. Now, if we're to look at it from this perspective here on the daily, right, you will notice that, let's just go from our low to our high, right? You'll notice that we're getting dangerously close to shifting structure on the daily here, right, which is down there at 18,006. Now, is there a path for bulls to kind of continue this run that we've been on for months and months and months? I would argue that there still is. While today was kind of a devastating blow, I will say that. And why would I say that? This previous bullish imbalance, you'll notice that when price filled it and retraced back higher, we did get that rejection, right? But if we come back over here and look, you'll notice that we did sweep liquidity here, essentially shifting structure on a daily time frame, and we got that turtle soup type move. We still have room down here in the imbalance for, is there potential for one more turtle soup for a run on these highs here, which all these relative equal highs that are sitting here, 1, 2, 3, 4, and then ultimately this fifth up here. No imbalances in between, just these pools of liquidity, right? So that's a possibility as well. Now, I'm also looking at this because I think this is probably the most interesting part to the whole situation. So throughout, and this is now over a month in the making of this current daily range on SPY, right? And again, why do I have my range set that way? And if you go to every single one of these highs, you're going to notice we've not come back down to discount once yet, right, on our daily time frame, right? And this imbalance here getting sliced through is, in the grand scheme of things, it's not all that crazy due to the fact that we have not retraced back down into discount, right? We also have relative equal lows on ES, which we took out on NASDAQ a while ago, right? We still haven't gone down into discount of the range either. And if I'm not mistaken, we have some, it might be on the monthly time frame. Yeah. So on the monthly time frame here on ES, you have a bullish fair value gap here, right? So I apologize if I didn't make this any easier for you, but I got to be honest. And, at this point, it really is a lot of a waiting game. The good part and the silver lining to all of this is that I think a lot of our questions will be answered prior to the market opening tomorrow with non-farm payroll. That tends to be a pretty, explosive day. So hopefully in the morning we get some of this cleared up. If we get that rocket ride early in the morning, we just have to kind of go into it with the idea that, from an hourly perspective, although our higher time frames still point bullish, our hourly, once we get in that 310 vicinity, it'll be a little sketchy knowing that we've had multiple imbalances in that discount of the range, right? Now, last thing, going back over to, where is it? No, it's not the daily. Shoot, I forgot what I was gonna, oh, okay, yeah, I meant to show you the daily, sorry. So an important spot, if you're bullish, I believe, is for market to retrace to 18,232 by the end of tomorrow. So you got 19 hours to do it. I know it seems like a pretty big range, 135 points. Reason why I'm targeting this, right? If price doesn't retrace back up to that level, to me, that leaves now a bearish imbalance, right? That'll create a bearish imbalance. If price can come up here and at least prevent that from happening, I think that just leads us down a path where there's just more uncertainty, unfortunately. If that imbalance fills, then I would anticipate early next week getting up to maybe even filling that imbalance before kind of puking to the downside. So just a bunch of ideas that I have going on right now, trying to use the current and available information to help make a guided decision here, right? It's just amazing how one afternoon session can really change things up on everybody, really. So so that's kind of what I got in terms of all of that. So let me just come on over here and check. Discount was better than the LKZ today. Yeah, well, Goonie. So here's the thing. Really, nothing from that initial move would have given really any insight to be looking for the kill zone low, right? Because if we're looking for that first imbalance to form, we didn't get it, to be looking for that, and ultimately that being our first imbalance down, that was kind of the giveaway there. But I wasn't really necessarily even looking for that after this bounce either. I thought we were gonna continue and get a trend day after this point. After that first move in the chat, I did say I wanted this low, and then you'll notice how about an hour and a half later I pivoted and I ended up taking that long. I kind of ditched my poor idea, which ultimately, fast forward 5 hours would have been an absolute killer, but I ditched that idea, ended up taking the long, and from that point, we did get that imbalance finally to the downside to, kind of confirm it. But big moves mean big range. Are you assuming that we finish up the prior range? Yeah, so if we do have a big range, right, just again to look at it, from a broad idea here, what was the price run that took out all of these lows in the process? And this one's really easy to identify because we don't have any bounces, right? It's just straight up meltdown. So that's why I have my high down to my low, and we're dealing with a really, really big range, right? What's five? What is that? 66? 566 to 18053. So we're dealing with like a 500 point range, right? And if you kind of submit to the idea that price tends to like to run up into discount of our range, that would lead us to 310, right? That would prevent that daily bearish fair value gap to form and ultimately lead us into the weekend with a little less confirmation or a little less confidence in the overall direction moving forward. So that doesn't seem all that crazy. But so that's what I mean with the big range. Yeah, no, I'm definitely not. Front running any type of reversal. To me, it just doesn't make sense to do that, especially historically. Again, the market is kind of rigged to the long side. So, let's see what else. Yeah, we can go over Mara, sure. Do you always use the wick of the candle that started the run or the body from the fib drawing? Yeah, I usually, what was the price run that took out a previous high? I'll use that low and draw it to wherever the high would be, and vice versa from the same situation. But I don't use the body of the candle. I'll use the wick. So yeah, first move through a side of the London kill zone is during New York session. Could be before. Yeah, it could be before. Yep. Again, I think it was 2 days ago where the move literally happened prior to New York Open. It is what it is. It played out, just didn't give us an opportunity to do so. But that is a possibility, of course. If it happens during New York Open, great. So hold on, I had a couple. Oh, all right. Does anybody have anything else that they wanted to ask about? Does it have to be a big move through one side? Nope. So if you go over to the channel over to the side, you'll notice that the move from Wednesday was very, very small. Typically, this is from my own testing, and I'm sure if you were to watch some sort of ICT video, you would echo this. But the consolidation during the London time frame is ideally when this, or when you would look to play this. If you were to look at it with a massive range that could occur in London, oftentimes that kind of just resets the algorithm. And what I mean by that is you'll basically get a choppy consolidation New York session, or at least the AM session of New York will be choppy. So, but Tuesday as well, not a huge move at all, right? And this actually, no, Tuesday failed. So Tuesday, you'll notice that ultimately, once we formed that first bullish fair value gap, we did start to move higher, but nowhere near the high of the kill zone. At that point, it actually happened like the next day. We ended up hitting the high of it, but and then again, Monday was pretty exaggerated with a extreme down move, and that first imbalance to the upside was the high of that kill zone. But and then even the examples in that video that I showed, I don't think they were all too big of moves that happened. So yeah, so all right, I hope that was helpful. All right, let's look at Mara. Let's go to weekly first, and then we'll move our way back. So Mara's still sitting pretty here. This not ideal. The way that it has so far reacted to that bullish volume imbalance right there. Okay, so that's not so hot. This imbalance here still technically there as well, but let's go over to the daily chart as well. The only thing is I don't want to say anything too definitively at the moment, because the way that non-farm payroll reacts, again, something that you can go back in time and back test, there's a chance that non-farm payroll completely erases today, right? I know it sounds crazy, and I'm not really banking on that, so don't take my word for that, but it has the capability of making that type of massive move. So that's why I don't want to completely write off any of these setups as well, because despite us closing below this daily imbalance right here, um, you know technically there's been no disconnect from our final imbalance. So at the same time, like if we were to come back up and create a bullish order block tomorrow or something, that changes the game here. So I don't want to jump to any conclusions with that as well, knowing that ultimately, for a shorter term trader, where would a stop situation be for something like Mara? And it's, if you were to take that most immediate price run, you can look towards that 614. But for me, the way that I'm looking at it, because I do have shares, and I'm not in a hurry here, is, I would prefer this not to happen, and I'm still not so sure it happens, but I just know I have that monthly bullish fair value up below as well. So that's the perspective I'm looking at it from. So now if we were to go to the hourly and just look at it from a tighter little price run, so obviously this imbalance here has been melted through this as well, but we did sweep this low, and we did get into this imbalance right here. So unfortunately, I'm not so sold, despite the market doing what it did. Bitcoin actually was up quite a bit today. So yeah, I'm gonna let non-farm payroll play out. That's for sure, because I'm not totally sold on prolonged downside, of course, until it's kind of proven. So so what else? Does anybody have anything else? Yep, no problem. Cool. Yep. So here's another interesting thought, I guess you could say. So if the expectation is for if it's for NASDAQ, if it's for ES to pull back and retrace, right? Sounds logical. It sounded logical for a while, right? But think about it. If just using, I guess this is, could this be irrelevant knowledge? I guess it could be, but a lot of funds, a lot of people with a lot of money, they would prefer money to be active at all times, right? And this kind of feeds into the idea of cycles in the market, or when you get rotations into specific sectors or something like that, right? So if you notice that out of all the names that I've been talking about for a couple weeks now, none of them really have, if any, have any substantial weighting in the S&P or the NASDAQ, right? The only one that I really was talking about was one that I've just been wrong on for a while, and that's Tesla. Other than that, all of these names that I'm talking about really don't have any association with NASDAQ or the S&P. So my thought process behind it is, if money is cycling out of these big names to get that retracement, and I know that a lot of funds have to have their money at work, right? And what that means is, when there's competition between a $1 billion dude or something like that, and he's going to different funds to see who's going to perform the best for him, who's going to follow his crazy laundry list of requests. A lot of the time they need that money to be active. They can't have that just sitting in cash, right? Because then the person who's paying them all this money is going to be like, yo, what the hell's going on? So by using that thought process, right, there's a ton of places I guess the money can really go. But the way that I look at it is, if it's coming out of the indices, and especially the heavily weighted names inside the indices, like, where is it going to go, right? So if there's no structural change in a lot of these setups, and you'll notice that a lot of the bigger names, they've all taken liquidity at highs or something like that, and they're kind of establishing a range. And if that's the case, then I'm going to remain looking at, I wouldn't even consider them mid caps. For example, something like Roblox really isn't a mid cap. It's a large cap, but it's just not one that's associated with the indices. So, are names like that, there's a laundry list of them that all still look fine. A lot of them look good. So is that a place where money can go? One thing that was pretty interesting that I looked at a little while ago was, I had an alert set on it because I've been sitting in shares of this for forever. And it's not even like a good dividend, but where is it? No, come on, where is it? I'm just typing it in. It's Oxy. Hold on, I'll come over to the weekly so it's clearer. But I've been sitting in this forever, right? Like, even I think it might even be back here. Like, I've had shares of this for a long time, right? And accumulating little by little as we go. But just an interesting thought here is that energy and oil in particular has been hot, right? So with that, we took out relative equal highs here. We know this is double the pool of liquidity, right? So this kind of adds into I guess the next little step of confusion for me moving forward, because I kind of want to see how this reacts, because look, I don't think it's donezo. I think Oxy's ultimately going here. But after taking out a double pool of liquidity, is that going to establish a range on a smaller little blip in time like this to get us to retrace back into a discount imbalance prior to the next run higher? Like, that's a possibility. And if that were to happen and energy starts to, lose its bid, where is that money going, right? So do we was this a one, 2, 3 week thing on energy that kind of led tech to stagnate a little bit prior to its next move higher? I don't know. I'm pretty sure gold is still at, if or near, or if not at, all-time highs. Like, so I'm just curious. Us being stagnant for a little bit, it's just it's just a little strange, and it's really a lot of the same names. You haven't heard any of these names making any monstrous moves, whether it was Apple, Tesla, or anything. If anything, they've been going lower. So, and even despite all of that today, you would expect Nvidia to be down like 10%. It's down 3. It's just it's a tough read. There's a lot of stuff going on, and I don't know if you even see it anymore. But this will be my last thought, and then I'll leave. But back here, I remember, because I was still kind of in my infant stages here. I'd been around through this, but like, again, I was not trading at the clip that I was trading at back in 18, 19. It's just I didn't know that anybody would trade at the clip that any of us do. Like, I thought it was okay, we'll buy some stuff, and then in a couple weeks we'll come back, sell it, and then we'll look for something else, right? But as we were making this massive move up, I remember people tweeting about it, like, oh, like, all these COVID traders, they're gonna get smoked when things go back to normal. And there was one thing that lined up here, that lined up with here, right until we got to the all-time highs. And that was, it didn't matter if it was, it didn't matter specifically, like any specifics, whether it was, tech. There's a lot of subsectors within, but it didn't matter. Tech, all tech names ran, right? And then you get to a point where, very similarly to how the market kind of behaved prior to that whole COVID madness, you notice how you'll have Apple going bananas, you'll have Microsoft stagnant, you'll have Google down, or vice versa, or any of them, where they're not all running together. And I think you need them all to essentially run together in order to create these imbalances. And without them all running together like that, you notice, like, we haven't had that for a while. Really, since January, even prior to January, we really haven't had them all running together, making these massive moves to give us any extra little boost or jump higher. So just interesting to see. I mean, I remember when I was first looking, like, you would have, this is just a made up example, but it would be like, oh, Netflix had good earnings, and what we're all kind of thinking right now is like, oh, if Netflix has good earnings, then we would expect all of the streaming services to like go up in price, right? But I from when I first started looking at this, like, that was not a good thing for those other streaming companies, right? Like, they were not looked to move all together. They were like in competition in a sense. So it would be like Netflix, has a knock out the part earnings. Like, what is that telling you? That's telling you that Netflix has more of the market share than these other companies, and like, those other companies would get whacked as a result. I don't know. It was just a different world, but I'm feeling that same type of uh, movement as we see. Like, semis have been hot. You've had EVs toast. You've had Apple smacked. It's like they're not all moving together like they were on that initial run. And does that signal that we're either going to grind, either up or down? I don't care. Or are we going to start to really pull back? And at this point, a healthy pullback. Again, I'm not saying it's happening now, but a healthy pullback is still like 1,500 points away. So kind of like what I'm saying on this, 5-minute, 15-minute chart. We got a massive range. We got a massive range here on the weekly time frame too. just a matter of how much time it's going to take for us to kind of take care of business down there. So yeah, I think that's all I got. Let me just reset all of these. And does anybody have any questions? I'm going to pop over and look in the chat now. Touches to peaks break through when liquidity is exhausted, right? Yeah, I mean, at this point, we don't really have like a draw on liquidity, I guess you could say, right? There's the only thing that we've had is just the high that we recently rejected off of. So it's like at that point, what's going to cause price to come down? Like either people are going to start taking a ton of profits or they're going to start shorting this sucker. That's what'll move it. It's not going to move until then. Oh, Tommy just pins, sure. Let's see. Yeah, actually, who brought it up? Pistolero brought up pins too. Yeah, it's almost where I would like it at. So just based on my setup here, I would prefer it down in discount. So you're gonna have there's really two opportunities at it, right at 50% at 33, and then you got another one down here. The range is pretty big on this too, if I'm not mistaken. So let me just see one thing. We took out that low with hold on, I gotta fix that too. Hold on. This price run. Now, okay. Massive range here too. And 50% of that range would be right here. So I think eventually it'll get to there, 51.49, that imbalance. But I would prefer to get it, ideally. If I'm gonna set an alert, I'm gonna set it like here. Try and get it cheaper. This lines up as a bullish breaker, low, high, lower, low. So this candle we can view as the breaker in that situation. And that's about 28. Yeah, I think it's going to go lower first. That's from the weekly perspective. But we'll see. SPY touched a relative equal low on the 4-hour and sliced through it. Am I seeing that right? Yeah, let's pop over. You said SPX, right? So let's go to the hourly. God knows what these levels are like. Oh, they're not too bad. Here, there. Okay, so technically still in a bullish range here on SPX. But so you said we sliced through a 4-hour relative equal low. If you're talking about these ones, you're on. Yeah. So hold on, let me zoom in. I think you're talking about these, right? Hold on, I'm pulling back the chat. Yeah, yep. So we created an imbalance down through. So, but here's the tricky thing. So, oh wait, I'm looking at the hourly. Whoops. Let me go to the 4-hour. Oh, the audio is a little faint right now. What a beautiful candle. Jeez. I don't see the relative equal lows on the 4-hour. If you're talking about this right here, I wouldn't consider that the relative equal or use that like idea. And the reason I say that is because this low right here actually took out, it swept liquidity there prior to that move higher. So hold on. Yeah, so this is really the first discount retracement. Listen, I'm not banking on this. I'm just saying nothing would shock me. And tomorrow, if we wake up to non-farm payroll and the market goes ballistic, I'll just tell you I would not be shocked at all. Even although I still kind of just want SPY and discount. it still hasn't gotten there. So yeah, no problem, Tommy. And that's from a much larger perspective there. Like I was looking at the weekly, but just overall, if I'm thinking lower on the weekly and I have like a shorter term like bullish setup or something, um, it doesn't mean that you can't trade it. It's just like I don't really look for the prolonged upside run. Maybe as a scalp if anything, but that's about it. And usually I just don't trade those, and I'll just look towards something else that lines up along multiple time frames. So
Yo, can you hear me?